Welcome back, everybody. Today we're taking a deep dive into HDFC Life Insurance.
Looking at their Q3 2024 financials.
Yeah, we've got the raw numbers,
Straight from the National Stock Exchange of India.
standalone and consolidated.
So let's,
What story are these numbers telling us?
yeah, what's really interesting here is that we're not just looking at a company's performance,
Right.
but we're also kind of getting a glimpse
Yeah.
into India's economic health and how people are feeling about, their financial futures.
Huh.
Insurance is a fascinating lens for that.
Okay, so first impression. HDFC Life ends the quarter with profits exceeding 400 million standalone
Wow.
and 420 million consolidated
Those are some seriously positive numbers.
in a year with global uncertainty.
Yeah.
Pretty impressive. What's their secret sauce?
Yeah, that's the million-dollar question, isn't it? This level of profitability could point to some really smart strategic decisions
Right.
that HDFC Life has made. And remember, we've seen other financial players really struggle this year. So they're clearly doing something right.
Mm-hmm.
And, for investors, that consistent profitability is a big green flag.
Yeah, absolutely. And their solvency ratio, a whopping 188%.
Well above the requirement.
That's going to be reassuring for investors and customers alike.
Yeah, absolutely. It signals that they can handle, their long-term debts
Yeah.
and crucially pay out claims without breaking a sweat.
Hmm.
And this strong foundation is what allows a company like HDFC Life to think about
Yeah.
growth and innovation.
Okay, so we've got this profitable company,
Yeah.
rock solid financial base. Are there any cracks in this picture-perfect facade?
Well, one thing that kind of jumps out at me is back in November,
Okay.
HDFC Life experienced a data theft incident.
Uh-huh.
And it's a stark reminder that even financially sound companies are vulnerable
Yeah.
in the digital age.
Right. And they mentioned taking steps to mitigate the situation, even
Yeah.
getting a court injunction to prevent the data spreading further. But
Right.
what are the long-term implications of something like this?
This raises, a really critical question about cybersecurity
Yeah.
in the financial world. For HDFC Life, it's not just about immediate damage control, but also that potential hit to their reputation.
Right.
Customers need to trust that their data is safe.
Uh-huh.
And this incident could erode that trust if not handled carefully.
Mm-hmm.
So we'll want to keep a close eye on
Yeah.
how they rebuild that trust moving forward.
Okay. Makes sense. Now, let's break down these standalone versus consolidated figures. It's one of those things that can make anyone's eyes glaze over,
Yeah.
but it's important.
Oh, it's crucial to understand the difference.
Okay.
Standalone is like looking at HDFC Life solo,
Right.
while consolidated brings in the performance of all their subsidiaries.
Mm-hmm.
So like HDFC Pension Management Limited, for example,
Okay.
and gives us the full picture of the group's financial health.
Got it. So looking at these consolidated statements, what kind of jumps out at you?
Well, the standout for me is the surge in first-year premiums.
Okay.
Over 20% growth year on year.
Wow.
That's a powerful indicator that HDFC Life is attracting new customers at a rapid pace.
That's huge. What do you think is driving that kind of growth? New marketing blitz, killer new products? Are people in India just suddenly realizing, hey, life insurance is a good idea?
It's likely a combination of factors.
Yeah.
They could be nailing their marketing, tapping into a new segment of customers, or even benefiting from a broader trend of increased financial awareness in India.
Okay.
We'll need to dig a bit deeper to see what's really fueling
Right.
this
Yeah.
impressive growth.
Okay, now while new customers are flocking in, their renewal premium growth seems a bit sluggish.
Okay.
Is that a cause for concern?
It's not necessarily a red flag.
Okay.
It could simply reflect the natural cycle of older policies maturing.
Okay.
But HDFC Life can't afford to get complacent.
Right.
They need to ensure that they're keeping those existing customers happy and engaged, so those renewal premiums keep rolling in.
Okay. So keeping an eye on that, another thing that caught my eye is their investment income, especially in the unit-linked individual life segment.
Right.
It's been a roller coaster ride.
The unit link segment. Yeah, it's a fascinating case study in how market volatility can directly impact an insurance company's performance.
Right.
The ups and downs in their investment income mirror the market's mood swings.
Yeah.
And it just reminds us that even giants like HDFC Life are not immune to external forces.
So investors should buckle up for a potentially bumpy ride.
Exactly. And it highlights the importance of diversification.
Mm-hmm.
Speaking of which, are there any segments that offer a smoother, less heart-stopping experience?
Yeah. Are there any safe havens in this?
Well, The participating individual and group life segment stands out to me.
Okay.
They're enjoying strong premium growth and a relatively stable investment
Mm.
performance, which suggests that this traditional model where policyholders share in the profits still holds strong appeal.
Okay, so we've got this interesting mix of exciting growth and nail-biting volatility.
Yeah,
It'll be fascinating to see how these trends play out.
absolutely.
Now, before we jump into the segment-specific details, there's one last piece I'm curious about. In their standalone report, they mention issuing $10 billion in
Okay,
subordinated debt back in October.
right.
Can you unpack that for us?
Yeah, so subordinated debt is basically a loan that's lower on the totem pole
Right.
than other debts if the company hits hard times.
Okay.
So in a worst-case scenario,
Yeah.
these debt holders get paid after other creditors.
So it's riskier for the investor, but higher potential reward.
Exactly. And they typically get a higher interest rate
Mm-hmm.
to compensate for that risk.
Makes sense.
From HDFC Life's perspective,
Yeah.
issuing this debt allowed them to bolster their capital reserves
Mm-hmm.
without diluting existing shareholders' ownership.
Clever move.
Yeah.
So they get the capital they need and investors get a potentially juicier return. But as with all things financial, understanding the risks is key.
Absolutely.
All right, we've covered a lot of ground already. Impressive profitability, a stellar solvency ratio, the data security hiccup, and the nuances of standalone versus consolidated statements.
Right.
We even dipped our toes into the world of subordinated debt and the ever-present impact of market volatility.
It's a lot to take in.
But there's so much more to uncover, especially when we look at how HDFC Life is performing across different policy segments,
Right.
ready to dive deeper.
Absolutely. Let's explore how those segments are shaping HDFC Life's overall strategy.
All right, before we get lost in the weeds, let's do a quick jargon check.
Right.
What exactly are these different policy types?
Yeah.
Participating, non-participating, linked, non-linked.
Right.
It's easy to get confused.
Yeah. The terminology can be a bit much.
Yeah.
So let's break it down.
Okay.
Participating policies, or PAR policies for short,
Okay.
are like joining a profit-sharing club.
Okay.
Policyholders get a piece of the pie. Bonuses or dividends based on how well the insurance company's investments perform.
So you're not just getting insurance, you're kind of a mini investor in the company itself.
Exactly.
Interesting.
On the flip side, you have non-participating policies, or non-PAR,
Okay.
and those offer fixed guaranteed benefits. No profit sharing, but
Yeah.
you know exactly what you're getting.
Okay, makes sense. And then we've got linked and non-linked, which tie into the whole market volatility thing we were discussing.
Link policies, like those unit-linked ones,
Yeah.
have their investment component directly tied to market performance,
Right.
hence the roller coaster ride we were talking about.
Yeah, exactly.
Non-linked policies, on the other hand, offer stable, predetermined returns,
Mm-hmm.
no matter what the market throws their way.
Okay, so that clears things up nicely. Now looking at how HDFC Life is performing across these different segments.
Right.
Are there any red flags or surprises?
One thing that jumps out to me is the contrast between the participating and non-participating individual and group life segments.
All right, we touched on those earlier. One seems to be thriving while the other is, well, maybe not so much.
It's not quite so straightforward.
Okay.
The non-participating segment actually brought in a larger chunk of the total premium income this quarter,
Okay.
but it's showing a deficit.
Wait, they're bringing in more money but still operating at a loss? That's not a good sign, is it?
It warrants a closer look, for sure.
Yeah.
It could be higher expenses in this segment,
Okay.
maybe from aggressive customer acquisition strategies,
Right.
or perhaps increased claim payouts.
Mm-hmm.
Analysts will be digging into these details to understand what's driving this deficit.
Okay. And in contrast, the participating segment is enjoying a surplus, which we talked about earlier. So what's the takeaway here?
Right.
Is one type of policy inherently better than the other?
Not necessarily. It's more about HDFC Life strategically managing a diverse portfolio.
Okay.
Each segment plays a different role, comes with its own risks and rewards.
Yeah.
It's a balancing act.
So diversification is their secret weapon, not putting all their eggs in one basket.
Exactly. By spreading their bets across various segments, they cater to a wider range of customers and reduce their exposure to any single risk.
Okay.
It's smart business.
All right. Before we move on to what this all means for investors, let's zoom out a bit. How is the Indian life insurance industry as a whole doing these days? What's the lay of the land?
The Indian life insurance market is booming.
Okay.
It's one of the biggest in the world, with huge growth potential, thanks to a young population,
Right.
a growing middle class,
Yeah.
and increasing financial literacy. It's a really dynamic space.
So there's plenty of room for HDFC Life to grow even bigger.
Absolutely. But it's not a cakewalk.
Right.
They're facing stiff competition,
Yeah.
both from established players and agile new startups
Okay.
that are trying to disrupt the industry.
So what are some of the big forces shaping the landscape right now? What's keeping HDFC Life's leadership up at night?
Well, the overall economic climate is a major factor. So a
Right.
strong economy usually translates to more people
Yeah.
seeking out insurance.
Makes sense.
Then there's the regulatory landscape,
Mm-hmm.
with the IRDAI, India's insurance regulator,
Yeah.
constantly pushing for greater transparency and consumer protection.
Okay.
And, of course, you can't underestimate the power of changing consumer behavior.
Right.
As people become more financially savvy,
Yeah.
their needs evolve, demanding innovative products and services.
So HDFC Life can't just rest on their laurels. They need to be nimble, adapt to these changes, and stay ahead of the curve.
Precisely. They need to be constantly innovating,
Yeah.
leveraging technology,
Yeah.
and anticipating customer needs to maintain their edge in this exciting, ever-evolving market.
All right, that brings us to the big question. What does all this mean for investors?
Yeah.
What should they take away from HDFC Life's Q3 performance?
Here are some key takeaways for those watching HDFC Life from an investment perspective.
Okay.
Firstly, their robust financial performance, consistent profitability, and that impressive solvency ratio all point towards a company that's built to last.
Okay.
For investors seeking stability and long-term growth potential, that's a strong signal.
So not a fly-by-night operation, more like a steady ship sailing through choppy waters.
That's a great analogy.
I like that one.
Of course, no investment is completely risk-free,
Right.
but HDFC Life's fundamentals look very solid.
Okay, what else should investors be paying attention to?
Where that surge in first-year premiums is encouraging, but it's crucial to watch how their renewal premium growth trends
Okay.
in the coming quarters.
Right.
Are they managing to convert new customers into loyal long-term policyholders? That's the real test.
Makes sense. Customer acquisition is great, but retention is key. Anything else?
Investors also need to consider the impact of market volatility on their linked policies,
Yeah.
especially the unit-linked segment.
Right.
As we see, returns can fluctuate wildly, so buckle up for a potentially bumpy ride.
It's that roller coaster we were talking about earlier. Highs can be thrilling, but those dips can be stomach churning.
Exactly. And lastly, that data theft incident, while unfortunate, offers a valuable lesson.
Okay.
Investors should pay close attention to how HDFC Life is responding to this challenge and what steps they're taking to strengthen their cybersecurity.
Right.
In today's digital world, data protection is non-negotiable.
Excellent point. So for anyone out there intrigued by HDFC Life and considering adding them to their portfolio, what's your advice? Where should they go to learn more?
I'd recommend diving into their annual reports.
Okay.
They offer a much deeper dive into their long-term strategy and overall operations. It's also worth comparing their performance with other major players in the Indian insurance market to get a sense of how they stack up against the competition.
Great advice. Knowledge is power, especially when it comes to making informed investment decisions. So there you have it.
Yeah.
A deep dive into the fascinating world of HDFC Life's Q3 2024 performance.
We crunched the numbers.
We explored the trends.
Uncovered those stories behind the,
Right.
seemingly dry financial statements.
Yeah. Hopefully feeling a lot more informed about HDFC Life.
And the Indian insurance landscape as a whole.
Yeah, for sure. We
A
covered.
lot of ground today.
Yeah, from profitability to
Solvency ratio,
cybersecurity.
market volatility
Round
for
the-
business segments.
It's been a really insightful journey.
But the conversation doesn't end here.
Right.
We've given you the tools and the insights.
Yeah.
Now it's time for you to explore further.
Exactly.
Dig into those annual reports.
Compare them with their competitors.
Really get a feel for how HDFC Life fits into your own investment strategy.
And as you do that, I'd challenge you to think even bigger.
Okay.
We talked about how HDFC Life needs to adapt to changing customer needs in a rapidly evolving market.
Right.
But what about the even bigger picture?
Oh,
What about the future of life insurance in a world where people are living longer and longer? Whoa, that's a mind-blowing thought. Imagine the implications for insurance, ensuring longevity, changing health needs,
exactly.
retirement planning that spans decades instead of years.
It's a whole new ballgame.
It is.
And it's a challenge and an opportunity that HDFC Life and the entire insurance industry will need to grapple with in the years to come.
Yeah.
So
Yeah.
as you continue your deep dive into HDFC Life,
Right.
keep that bigger picture in mind.
Absolutely.
The future of insurance is going to be fascinating, and who knows, maybe you'll be a part of shaping it.
That's a fantastic point to end on. Thanks for joining us on this deep dive into HDFC Life. Until next time, happy learning.